Dave Ramsey recently wrote an article titled 3 Reasons Why Whole Life Insurance is Absolutely Horrible. And I'm here to tell you that if you believe that article, you are absolutely being lied to. Listen, he brings up 3 points in the article that I want to actually help break down. Let's bust through these lies and help you understand the truth behind how whole life insurance can actually work for you to build wealth. The first point that Dave Ramsey brings up is fees, fees, fees. Listen, there is a cost to everything, whether it's a charge or your time or the investment. And with life insurance, there are fees. I do not want to mislead you. And to be honest, the fees in a cash value life insurance policy like whole life are very front end heavy. So if you're looking for a short-term investment, whole life insurance is a terrible solution for you. But if you're looking for an investment option that gives you protection, long-term security, access to tax-free income, and a death benefit in case something happens to you prematurely, then whole life insurance is definitely a great option. Now, when we talk about fees, I want to run a little scenario by you. Let's pretend that you're going out to dinner downtown and you have to park in a parking garage. And as you pull up to the restaurant, you see that there's 2 parking garages across the street. The first parking garage has a sign out that says $5, park here. You look a little ahead and you notice that there's a $10 parking garage. And you think, why would anybody park in the $5 parking or park in the $10 parking garage if you could pay $5? And so you make the turn and you park in the $5 parking garage. Well, to cross the street to get to the restaurant, you have to walk past the $10 parking garage. And you notice the fine print under the $10 mark. And it says $10 to park here. But when you leave, you get $15. And that is what whole life insurance is. See, you were out the $5 when you parked in the $5 parking garage, but you will never get anything back from that $5 investment. But if you park in the $10 parking garage, it is more expensive because you're out the $10. But when you leave and time has gone by, you actually get more than you gave up. So when we're looking at fees, I want you to think, what am I actually getting for the cost of that fee? Now, the second thing that Dave Ramsey says when talking about life insurance is that there's lousy returns. I want to ask you, what is that in comparison to? Listen, if you're comparing whole life insurance against the stock market, Dave Ramsey is actually probably right. Because in most cases, over time, the stock market does well. Yes, you may have a blimp year, but whole life insurance is more of your steady Eddie. So if we're going to compare the rabbit and the hare scenario, then we need to actually be comparing an apple to an apple and not an apple to an orange. If we're looking at whole life insurance, we want to think of bond-like alternatives, bond investments, or money in the bank account. Okay, so a bond may be getting 2, 3, 4%. And money in your bank right now is probably earning point nothing. So whole life insurance can get you anywhere from 4 to 6% on average. If you're looking at 3, 4, and 5 or 0 compared to 4, 5, and 6 or more, is that actually a lousy return? No, absolutely not. Money has job descriptions. And if the description of the money is not to be your keep up with inflation and grow and get the best return, which is your stock market money, if this is safe money that you want to gradually grow, this is getting great returns with incredible security. The third reason that Dave Ramsey doesn't like whole life insurance is because he's asking the question, who gets your money when you die? And I almost laughed out loud when I read the article saying that the insurance company is basically keeping all of the money, because that is not true. You have a contract when you have a life insurance policy, and when you die, whatever the disclosed death benefit is goes to your beneficiary. But there's two bigger things that he completely ignores with cash value life insurance and a whole life policy. The first is the taxable liability of the life insurance. There is none. That death benefit is 100% tax-free to you when you get it as the beneficiary when somebody dies. Now, you didn't get it if you are only focusing on the death benefit, but you probably put it in place to protect somebody that you love, and they shouldn't be taxed on it. The second reason that I don't think that he's really considering the value of whole life insurance is because who gets the money when you die? I want to know who gets the money when you're living. Cash value life insurance, and one type is whole life insurance. Whole life has a cash value that is accessible to you during your life. This is like the greatest opportunity ever to spend your life insurance during your life. And if distributed properly, is still 100% tax-free. Listen, Dave Ramsey has done a lot of good, but he has gotten this one very wrong. Do not sell yourself short and take him at his word. Do your due diligence. One of the best ways that you can do that is heading over to our YouTube channel, Navigate Your Wealth, and check out our playlist titled Life Insurance. We break down what it is, what are the types, what does it cost, what is the value behind it, and how can you use it not only during your life, but as an income replacement in case something happens to you prematurely. Listen, 3 reasons why whole life insurance is absolutely horrible. I could give you 300 reasons why whole life insurance should be a part of your financial plan to build your wealth.